Little over a decade back, in 2011, American tech stocks revisited the dot-com bubble burst days. Several new technology stocks like Facebook and Twitter were sparking controversy in Silicon Valley with their stock market listing. So, stocks of tech behemoths like Apple and Microsoft had few takers. Apple, for example, had a price to earnings PE ratio of barely 15 times then, about the same as the broader US stock market then. This was despite Apple's immense profitability and dominant market position. It was already America's largest company by market capitalization, surpassing ExxonMobil. But most American investors, other than the likes of Warren Buffett, were too concerned about how Apple could thrive in the age of new tech stocks. The rest, as they say, is history. The stock of Apple went up over 16 times since 2011. So did Microsoft. In comparison, the stocks of the new age stocks like Facebook and Twitter had a volatile and muted outing. Nvidia remained a penny stock for 17 years after the dot-com bubble burst. But since 2019, the stock has gained over 10 times. The moral of the story is that new technology may not always make old technology stocks redundant. It is wrong to assume that every decades old technology giant is the next Xerox. Nor is every new listed tech company or tech startup buoyant with venture capital like valuations the best kind of tech stock to create wealth. That brings us to the market apathy for homegrown technology majors TCS, Infosys and HCL Tech. Believe it or not, today a newly listed drone stock, Dronacharya Aerial Innovations, gets 4 times the valuations that TCS does. This is not to say that the drone stock does not have growth prospects or may not grow at a slightly faster clip than TCS for a few years. But the PE multiple that is awarded to the drone stock puts valuations of India's largest tech stocks to shame. Not just that, even the stock of a public sector entity focused on technology for railways, IRCTC, fetches double the multiple that TCS or Infosys do. Meanwhile, the likes of newly listed Zomato and Paytm, which is 197 Communications, fetches 5 to 10 times the book value even as their earnings struggle to get into the positive territory. The reason I'm making these comparisons is because I do not see these businesses transforming like TCS, Infosys and HCL Tech will in the next decade. A transformation that will not only change how the tech giants cater to their customers, but also how the customers respond to such innovation. The transformation I'm referring to is AI or artificial intelligence led tech. More specifically, generative AI, which is user driven. The primary difference between generative AI and traditional AI lies in their objectives and functioning. Traditional AI aims to perform specific tasks based on predefined rules and patterns. Generative AI goes beyond the limitation and strives to create entirely new data from the user data that resembles human created content. The hype around generative AI or Gen AI began after the onset of OpenAI's ChatGPT. With this, technology shifted from being restricted to software codes to something that even school-going kids could use. I do find the use of ChatGPT for downloading school projects, writing articles, and creating ready-made images counterproductive. But the use cases of the technology are multiplying. ChatGPT and its related AI technologies are here to stay. Google's Bing ChatGPT is making its own niche. Even TCS's own ChatGPT like AI tool is set to debut soon. Moreover, this is not just for low impact or less critical objectives. Information and knowledge that is often stored away in repositories was all these years available through hundreds of Google searches. AI offers such medical, legal, financial, historical, and educational insights available in the most user-friendly way with a single click. It in fact goes beyond factual and joins the dots for even creative content, whether words or images. Such technology cannot and should not be wished away, but we must be careful. A recent legal case made the news because the lawyers had used ChatGPT to argue the case. Turned out that the AI cited cases were literally made up, they were fiction. As you might imagine, this did not work well for the lawyers. AI does have the word intelligence, but at the end of the day, these are still algorithms and computer processed data that are devoid of the human emotion and common sense. Not just news articles, but public release content as press releases, blog posts, sales copies, and biographies can be artificially produced with such AI led content. But without fact checking, such content can lead to hazardous consequences. Even our national defense is increasingly AI software based. The modern combat soldier is embedded in a web of software that provides intelligence, communications, logistics, and weapons guidance. Software powered drones launch airstrikes without putting human pilots at risk. Intelligence agencies do large scale data mining with software to uncover and track potential terrorists. Sifting through enormous amount of data, looking through patterns and anomalies has helped shape our understanding of space launches. To an extent, it helped come up with life-saving medication like the vaccines for COVID-19. We are told ChatGPT is even acting as a fund manager for few hedge funds. So vast amounts of data can be analyzed, understood and explained to humans by AI tools that are being created by technology majors. A few months back, all Indian tech majors announced big moves in the generative AI space. Wipro announced that it will spend as much as $1 billion over 3 years to build capabilities. TCS HCL Tech partnered with software major Nvidia to skill their employees. In the September 2023 quarter results con call, TCS announced having 100,000 strong Gen AI ready workforce. The company claimed to have as many as 250 Gen AI opportunities in the pipeline. Although the size of the deals is small at the moment, the tech majors believe Gen AI has captured the imagination of clients. Most of the Gen AI projects are proof of concept or pilot stages. So the AI deals are relatively smaller to begin with. They are either $500,000 or sub-$1 million deals. But the companies are currently working on hundreds of such opportunities. And this could soon move from being a volume game to a high value, high margin opportunity. So AI is certainly transforming the business models of decades old tech majors in India. And it's a matter of time before they help other non-tech companies transform themselves too. Even then, if investors choose to ignore such stocks, citing next quarter's margin dip, they should do so at their own peril. 2024 can very well be the year of return of India's big tech stocks. Hope you like this video. Thanks for watching.